This is one of the a clipping from a a newspaper, or rather a digital newspaper. They say expect 50% repo rate cut by RBI, but in the first half of 2025. Expect rupee to be in 81 to 82.5 range. Such a poor currency prediction. Forget the rate cut. And you would remember I've been ranting on the group, and I've shared this to you before as well, that the currency is going to go towards 85. My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life, because it cannot happen without a commitment. And it is my commitment to make sure you get all the support that you need to walk and achieve that destination. The RBI keeping the repo rate unchanged at 6.5 for the third time in the row. So third time in the row means 3 quarters now, right? What is going to happen? If I look at the news, it's crazy. This is one of the a clipping from a newspaper, or rather a digital newspaper. They say expect 50% repo rate cut by RBI, but in the first half of 2025. Expect rupee to be in 81 to 82.5 range. Such a poor currency prediction. Forget the rate cut. And you would remember I've been ranting on the group, and I've shared this to you before as well, that the currency is going to go towards 85. We're already in 83.5 is something we've already hit, and I've been talking about it since 82 levels. So this is why I don't read news or newspapers, because they don't even have a clue what they're talking about. At the same time, this is 31st July. Now look at another newspaper, 14th August, just 2 weeks apart. RBI may hike repo rate. These people are saying cut, this is saying hike. Exact opposite. After CPF, inflation reaches upper tolerance band. So clearly, another one, repo rate may cut possibly only in July, September next year, which is 2024 is what they're talking about. Honestly, I think the people in news have no clue what they're talking about. They just have to take a side, which is why I don't read newspapers, because I don't trust their judgment. In fact, I don't even trust the judgment of credit rating agencies. We've spoken about that in the past. The biggest power an investor has if they do their own research. That's the biggest power, because then you won't be influenced by what the people want you to do. You'll be having a power to make your own decisions. And if you look at your last 10 decisions and all the decisions that are working in your favor, now you have a strategy. You have a sound research. And if you don't have all this, obviously, we're always here to support you. But even if you look at the suggestions you've received from us, and I'm not trying to boast or do anything here, I'm just trying to make a point that if you look at the last 10 decisions, investing in mid-cap or investing in bank or Hong Kong, or all the investments suggestions that you've got, how have they done? If you just look at that, you'll understand that does the research work or does it not work? And whatever form of research you're taking from us or doing yourself, whatever form it is, it should be 70 to 80%, right? If it's in that region, it's excellent. If it's 60%, it's good. If it's 50% or below, it does not work. So you do your own analysis and see where it stands and just follow through it. Because if that is what is giving you results over a period of time, so just keep on following the same methodology over and over again. Now I want to talk to you about the factors. Now, what factors actually affect the repo rate decision by the RBI? Because that is what we're trying to understand. Will the interest rate be the same go up or go down in the next few months or years. So the factor we need to, let's first look at the comparison between the US and the Indian interest rates since 2019. You will find that the pattern is exactly the same. The action in terms of percentage might be different, but the pattern is the same. 2019, India was at 6.5, US was at 4.75. Then India was again at 6.5, they moved to 5%. Since mid 2019, interest rate kept on dropping. They were flat from 2022 from 2020 to 2022, and then they both started rising again. But for the first time, you are now seeing a disparity. The US is still increasing interest rates because their inflation is still not as much in control, but India is on a stable front. So this is good news that India is trying to find its isolation against the foreign markets, at least in case of interest rates. But is it totally insulated? No, they're still affected by them. The second thing is inflation. So obviously, and this is the most purest form to see, if the inflation is going up, the interest rates do have to follow. So if the inflation, the CPI inflation, as you were seeing in the news article, CPI inflation is a very important parameter. I feel inflation went up recently because of the excessive monsoon. A lot of crops got damaged. A lot of transportation system got damaged, especially from the hills. If you're someone from the North India, you would know what has happened in Himachal. And it was not expected that such sort of rain will happen. We were not warned by the Met department. I don't know India में Met department को Met ही बोलते हैं, but I'm talking about the weather department. So because we were not prepared for it, the food, the crops got damaged, the transportation system got damaged. This increases the price of all the fruits and vegetables. We recently, haven't you heard that news that McDonald's and Burger King have removed tomatoes from their menu? Does anyone know this? That's the effect of inflation. You can't increase the price, but you have to remove items. In case of the economy front, obviously the interest rates will either have to follow up with it, or they'll have to wait and watch. But they can't wait and watch forever. If the inflation still goes up, you still have to manage through like that. So coming back to what I was saying was, inflation is the next factor, and last is economic strength. If there is economy is doing well, everything is great, then the interest rates, they tend to not move a lot. If there is economic instability, then a drastic change in the interest rate needs to happen, plus or minus depending on the situation there is. So what I'm still expecting interest rates should cut. This is my personal thought, my belief, and my analysis of what I understand. There is no sure way of knowing this, simply because RBI is making this decision on a quarter-on-quarter basis, looking at all of these parameters which are dynamic in nature. So you can never for sure say this will happen, but it looks like to be on the higher end here on. And likely, I feel that it will come down, which is why we suggested people to invest into long-term debt so they can take advantage if at all it happens.